By the end of this video, you're going to understand how to clearly identify support and resistance levels, the one institutions actually care about, not some random lines retail traders draw. I'll show you how to find them, how to confirm them, and how to use them to anticipate market reactions with clarity. Hi everyone, I'm Abigail, a partner of GoFundMe Trader, one of the best prop firms in the industry. If you're looking for a prop firm that has funding up to 400K, scaling to 2 million with 100% payouts, 100% refundable fees, with 100% profit split, no hidden rules, no time limits, news trading allowed, and fast bi-weekly rewards with first reward on demand, check the link down below. Okay, let's jump into the concept. So what is support and resistance actually? Well, think of support as a price level where buyers constantly step in, and think of resistance as a price level where sellers constantly step in. So how to identify them easily? Well, on your trading view chart, you're going to want to switch to the 4-hour time frame. This removes all the noise and truly shows the highs and the lows of the current market structure. We're going to look for 2 to 3 clean reactions, clear structure, space for price to move, and strong reactions rather than choppy consolidation. Remember, a body candle equals commitment, and a candle's wicks equals noise and liquidity. So we're looking for formation. Support forms at a respected swing low, and resistance forms at a repeated swing high. So most traders draw too many levels or rely heavily on wicks. Remember, higher time frames always give cleaner zones. So now we're going to identify a support example. So now we're on the gold chart on the 4-hour time frame. So we notice that here price forms a swing low, but then it comes back to the same level, right? So it goes up, comes back down to our same support level, and reacts strongly because as you can see, we have a big upward trend. So this confirms a valid support level. I want you guys to think of support level as the floor. So it is your base, right? So everything price touching that point is basically holding it or is landing on top of it. And think of resistance as the ceiling. So price is not going to get past the resistance zone because every time price touches it, price comes down. So we're in this up downward trend, and that's a support and resistance area. So I'm waiting for price to tap into my support to buy, and I'm waiting for price to tap into my resistance to sell. So I'm noticing that's where sellers are stepping in, and support is where buyers are stepping in. And as you can see here on the gold 4-hour time frame, as my support level, I'm identifying where is gold's price touching constantly and going upwards. That's how you identify a support zone. Because I'm noticing here when price touched this area, here I'm noticing when price touches right here, gold had a strong reaction to the buy side, right? All the way up here into our resistance zone. What happened? It came back down here. Same key level area. It consolidated a little bit, but then we also got a really big, nice push up here. So that's how I identify my support zone. I'm also looking for a higher time frame, because if I were to do this on a 1-minute time frame, on a 5-minute time frame, I wouldn't have a clear indication. So I'm looking at the overall move of gold, what area it's going to buy and sell. This is why it's so important to use higher time frames. Here's another thing I want to mention. Whenever you're drawing your support and resistance lines, don't put the lines through like a full body candle. You're gonna want to put it above liquidity sweep, so wick candles, but don't put your lines through the body candle because that's a really big mistake and you will definitely get stopped out and hit your stop loss. You want to be putting your support lines and your resistant lines above swing highs and swing lows or candle wicks. So we're going to look for a resistance example, and we can go on TradingView and use our trend line. Support and resistance was definitely one of the first concepts that I learned during trading because it is so vital. It's like that, and also supply and demand are like the top things you have to know if you want to be a profitable trader. And it's very simple concepts. I mean, you see it constantly throughout the chart, higher highs, lower lows, but we're trying to find the tops and the bottom of those to really identify where to put our entry trades and when to exit. And to understand all of that logic, you have to learn your support and resistance areas. So yes, this top area would be a resistance area. But then we also come down here, we can also see that gold has treated this area as a resistance area. Notice how it is mostly all wicks, which means wiping out liquidity. Wicks equals liquidity sweeps. So, okay, so now that I have identified my resistance zones, look at what gold does every time price touches this point. It literally comes down, right? Boom, down one time. This is our second time actually, because our first time was over here when we had a strong buy up, and as soon as we hit this level, this is our first time that gold rejected this area. Sellers has stepped in, pushed to the downward side, came up, price did not break above this resistance zone, right? Second time it touched it, came back down. Coming up here is consolidating up to the buy side. It came down here again for a third time. Let's see if it respected it, if it it continue to go down or if it continued to went up. Nope. Gold touched it and said, I don't want any part of this. I am going to keep down in my same level. This right here could essentially be a support level as well, down here or over here. So if you were to want to jump into a sell trade on gold, I would highly recommend waiting for price to touch our resistance area to step in to sell gold, and you would have got a nice profit there. And sometimes trading can be really that simple, but whenever you're trading 5 minutes and here it gets more difficult and your stop loss are more higher leverages. So it's definitely better to wait when you definitely want to enter. Remember, it's about not trading more, but taking the right trades. So now we're going to look for support turning into resistance. Well, what exactly do I mean by that? Well, I'm looking for a support level to break, come back to that same price level and reject it. So simply going towards the downside, because we know our support level is a price level for buyers to step in. So I am on US 30 chart and I have identified my resistance area and my support area. Essentially, what I am expecting is that when price touches this area again, I'm looking for US 30 to continue to buy as it has done previously. As I can see right here, US 30 broke our support area with a big wick. Well, I'm not going to jump into a sell because it wasn't a full body candle, keep in mind. So I'm just going to keep watching. And as you can see, these 3 candles here, US 30 was kind of just like, I'm kind of thinking about it. I don't know, kind of just in the middle. And then we get a strong push towards the downside. As soon as US 30 broke with this second candle right here, as soon as I have seen this candle or this candle, I would have immediately jumped into a sell because that was a clear indication of our support level being broken. Remember, we're waiting for a full body candle to break our support level to jump into a buy, because that means the trend continuation is changing. And let's just see exactly what happened now. As you can even see here, price kind of came back to retest that area where buyers probably wanted to take over, but sellers said, nope, I'm pushing it to the downside. So that could be like a price retest if you were to like jump into sell and price was to move upwards. But as you can see, the real trend was a downtrend, which means sellers definitely had stepped in and took control. So this is one of the cleanest continuation setups that you can take to trade and pass your challenge. Now let's look at an invalid setup. So now we're back to gold on a 4-hour time frame, and we're looking at an invalid setup. Then you may come to this area and think, oh, here's our support area, here's our resistance area. But I'm just gonna tell you right away, right there could be a resistance area, but then also up here would have been a resistance area. So if I would have drawn that across, as you can see, gold broke above this. So gold didn't have a ceiling. As we talked about, the resistance is the ceiling, the support is the floor. Here gold was just consolidating and continue to go up to an uptrend, because remember how I said you can't draw your trend lines through full body candles. If I wanted to draw one trend line through, I would only cover the top and not the bottom. A true resistance would mean like all candles were touching up here instead of it half touching it. So it would be up here, come down, come back up against the same level, come back down, as we saw in our previous examples, but gold did not do that. And that could be tricky because you could think, okay, I'm gonna wait for gold to come above this area again for it to sell, because I noticed once it comes close to this area, I see a push down. But clearly that same area, gold actually broke out to the buy side. So we do want to be careful on identifying false resistance. And how do we know that this was a false resistance level? As I said, a clean resistance level, you would get 2 to 3 clean reactions of a rejection. Here we just got 2. Here we got another 2. We didn't get 3. I feel like 3 is a key number. If you get it 3 times, even 4 is better, then that's a clean resistance. Here it's just consolidating and waiting to break out into a buy. So now let's go to 2 to 3 examples of real support and resistance trades. As we like to say, we're key to helping us pass prop firm challenges. So we're going to be looking for trade 1, a support bounce and a continuation to the upside. So I'm on odd and CAD 4-hour time frame, and I have identified already my support resistance. So remember, we're looking for a swing low liquidity sweep, which we found here, we found there, we found there, we found here again. Every time price touches this point, buyers take control, and odd CAD goes into an uptrend. Up here we identify a resistance zone. Remember I said if it touches 3 times or more, it's really good for a resistance zone. And as we can see here, even though it did wick through, I would still count that. Remember, because it is sweeping out swing highs for a resistance zone. So we can identify right right here. 1, 2, 3. And our support continues even over here and over here. So what happened after odd CAD broke through our resistance zone? Because right here it broke through our resistance zone after a price touched our support zone and cleanly bounced up again. Well, as you can see here, we are now in a new resistance area, and then price came down again. So if I were going to take a trade on odd CAD, I would either wait for price to come below here for a buy, or if I wanted to go for a sell, since I know this is my resistance area, if price comes back up here and it does not go above this area, I would jump into a sell. But if it broke that area, I would jump into a buy, because I already have identified that this is where sellers like to step in and push to the downside. So I would wait for a reaction right there. So that is a support bounce continuation trade. And this type of setup is perfect for passing funded challenges. So now for my trade 2, I'm looking for a resistance rejection and intend to continue in that direction. So I'm now on chart GBP/USD. And I'm kind of now just noticing how clean this certain pair moves, and I'm actually going to start trading it. So if you're looking for a pair that moves cleanly, not like gold that has been crazy all over the place, I recommend GBP/USD, because now that I'm looking at it, it's given very clean rejection structure and support structure. So I just already identified some key rejection levels on GBP/USD. One right here, another one right here, and another one right here. So what I would expect that if GBP/USD came back to these levels, I would expect a push to the downside. So I'm already noticing, again, the same key level that GBP/USD price level touched. So once I saw that it had hit a resistance level, I would have put a sell. And then, of course, it moved into a really clean downward price action movement. But then I also want you guys to notice this other key level here. This was another resistance level. And once I zoom out, you will notice that when GBP touched this level again, look at this big wick. Liquidity sweet, stay away. That's why you have to let candles close sometime. I know you guys would want to probably jump into a sell if I were to go to a lower time frame and enter into a sell, but then you would have tried to like enter a sell here and it would have completely bought up and then you would have hit your stop loss. So it is better to wait for candles to close on a higher time frame before you want to enter into a sell if you're patient enough, because look exactly what GBP/USD did right at a previous resistance area. It completely sold, and that would have been a very nice sell-off. So yes, supporting resistance zones work 100%, and they are one of my favorite methods to use in trading. It's simple and old, but it is effective. They always said, if it's not broken, why fix it? If this method has continued to be working over and over time and helping traders pass their challenges, I would continue just sticking to using support and resistance, supply and demand, and breaker structure. You don't really need to complicate your trading, guys. So now we're going to move on to trade 3, a break and retest. I am on NAS 100 again on a 4-hour time frame, and I have identified my resistance area, my support area. I'm looking for a support level to break, for price to retest the same area from below, reject it, and continue the trend it was currently going in. So now that I've already identified my support area, I'm looking for NAS 100 to break this area. We just want to see what NAS 100 does at our support level. As you can see here, NAS 100 has touched it, it hasn't broken below it, and then it shoots up into again. So most people would think I'm going to jump into a buy here. And as you can see already right there, that NAS 100 has broke our support level. Right here with this candle, I can see that price broke our support level. So now I'll be looking to get into the downside. Or now I would be looking to get into sells, but I would give more time just to make sure I'm in the right. So what it does here is price came down and price came back again, retesting this same area. So let's just say you hopped into a sell here and you're like, wait, it went down, but then it's coming back up again. Maybe I was wrong. Maybe NAS 100 is going to buy. But let's see what happens when it not only when it broke our support level, but it came back to retest it after it already broke. Let's see what NAS 100 does. Okay, a clear rejection, some candle wicks, and then NAS 100 continues to the downside. As you can see, we have identified that area as our breakout, and then a clear continuation sellers took control. So this is one of the highest probability setup trades. So now you understand how support and resistance actually works, how to identify clean levels, how to avoid fake reaction zones, how to apply the concept on real trades, and how these trades helped us pass prop firm challenges. So if you're ready to apply these concepts and scale to real capital, I highly recommend Gold Funded Trader. Because you can trade up to 2 million and get paid up to 100% on demand, funding is up to 400K with scaling all the way to 2 million, and you get 100% refundable fees, a 100% profit split. You also get fast bi-weekly rewards. News trading is allowed. First reward on demand, which is actually very important because you don't have to wait. There are no hidden rules and no time limits. The link is down below. I'll see you guys in the next video.